You've probably heard the saying, history repeats itself, right? Well, billionaire investor Ray Dalio is basically betting the farm on it. He's got this theory that the United States is following a very predictable script, one that's played out for every major empire before it. And spoiler alert, it doesn't have a happy ending. So today we're going to dive into his theory to understand why he's warning about something way, way worse than your typical recession.
And look, this isn't just another doom and gloom forecast you see online. Dalio uses a very specific and frankly pretty alarming metaphor for what he thinks is on the horizon for the US economy.
This right here, this is the key. You have to forget everything you think you know about a normal economic downturn. Dalio is not talking about some job losses or a dip in the stock market. No. He's pointing to something much deeper, a fundamental systemic crisis that could literally shake the entire foundation of the economy.
So what on earth does he mean by a financial heart attack? Well, think about a real one. It's not just one little thing going wrong. It's a massive, critical failure. In economic terms, Dalio says it's the perfect storm. You've got crushing debt, you've got intense political fighting inside the country, and you have a rising rival power challenging you from the outside, all of it hitting at the exact same time.
Okay, so you're probably wondering, how can he possibly predict something like that? Is he using a crystal ball? Nope. Dalio's theory is actually built on a ton of research. He went back and studied the last 500 years of history, and what he found was a pattern, a surprisingly predictable one.
He looked at all the big players, the great empires of the last few centuries. We're talking about the Dutch, who basically ran global trade. Then the British, with their empire where the sun never set. And now, of course, the United States. And he noticed something incredible. They all followed this almost identical life cycle. A rise, a peak, and then the eventual decline.
And he didn't just stop there. He broke this whole life cycle down into 7 clear stages. This framework, the 7-step process, is really the key to his whole argument and for understanding exactly where he thinks the US is today.
All right, so here's the whole cycle in a nutshell. It kicks off with a new world order. That leads to a period of peace and prosperity. The good times, right? But that prosperity plants the seeds for a debt bubble and a widening wealth gap. Eventually, that bubble bursts. And what's the go-to move? Printing money. A lot of it. This, Dalio says, is what ultimately spirals into revolution and war, which forces a big debt restructuring, and boom, the whole cycle starts over with a new power. So let's start at the beginning.
So stage 1, the New World Order. Every single one of these cycles starts the same way, right after a huge world-changing conflict, like World War II. You get a clear winner who gets to set the new rules of the game. And the ultimate prize? Getting your currency to be the world's reserve currency. That's just a fancy way of saying everybody else has to use your money to do business. It gives you an incredible amount of power.
And for the United States, that big moment happened in 1944. It was at this famous meeting called the Bretton Woods Conference. That's when the US dollar officially became the king of all currencies, the world's reserve. It cemented America's position as the new top dog, and according to Dalio, it's what kicked off the cycle we're in right now.
Now this is super important. This is the critical turning point. It happens between stage 2 and stage 3. See, in the early, good years, an empire takes on what Dalio calls productive debt. Think of it like a smart investment. You borrow money to build roads, schools, factories, stuff that actually makes the country stronger. But then, something shifts. The empire gets a little too rich, a little lazy, and starts taking on bubble debt. This is like borrowing money on a credit card to gamble. You're just speculating, not creating anything real. This is what creates those massive wealth gaps and makes the whole system unstable. And that right there, that's the pivot towards decline.
Sooner or later, that bubble has to pop. That's stage 4, and for most of us, 2008 is the big, glaring example of this. So what does the government do when the bubble bursts? They jump right into stage 5. They fire up the money printers. We're talking about creating trillions of dollars out of thin air to stop the bleeding. And it might feel like a solution at the time, but it's really just a short-term patch with some really nasty long-term side effects.
And just to give you a sense of the insane scale we're talking about, the amount of money they printed after the 2008 crisis, what they call quantitative easing, was absolutely massive. But look at what happened in 2020. It completely dwarfs 2008. It's not even in the same league. This right here is stage 5, playing out on a level we have literally never seen before.
Okay, so we've got the historical pattern. We've walked through the first 5 stages of this cycle. Now for the big parts. Let's take this framework and lay it over what's happening in the United States today.
So this is it, the million-dollar question. You look at everything, the mountain of debt, the crazy wealth gap, the money printers working overtime. Where does Ray Dalio say the U.S. is on this 7-stage map right now?
His diagnosis is, well, it's pretty blunt. He argues the U.S. is at the very end of stage 5, that's the money printing phase, and is just beginning to step into the turbulent and dangerous stage 6.
And let's be crystal clear about what stage 6 means. Historically, this is when the fighting turns inward. It's the rich versus the poor. It's brutal political division. It's a battle over who has the wealth and who has the power. And all that internal chaos makes the empire weak and vulnerable, which is like blood in the water for rising powers looking to challenge the top dog.
So where does this leave us? Understanding this cycle isn't just some boring history lesson. It's about recognizing the patterns at play so we can maybe understand the chaotic world around us a little better. So let's recap the key takeaways here. Dalio's main point is that history follows a predictable pattern, one that is repeated over and over for centuries. Right now, he argues the US is checking all the classic boxes of a late-stage empire. And the whole thing is being driven by those 3 key factors: massive debt, huge wealth gaps, and deep internal conflict. And that leaves us with one final critical question. Dalio's given us a map based on 500 years of history, but if a cycle is this predictable, does that mean its outcome's inevitable? Or does understanding the pattern, seeing the road ahead, actually give us the knowledge we need to choose a different path? That's the question I'll leave you with.
Have you ever felt like the economy is just this massive, unpredictable machine? Well, it turns out it actually moves in pretty predictable cycles, kind of like seasons. The real question is always, what season are we heading into next? So today, we're going to dive in and unpack what one of the world's most successful investors, Ray Dalio, is seeing on the horizon. And that quote right there, that's our whole starting point. Dalio's entire philosophy is built on understanding that the future almost never looks exactly like the past. So instead of trying to drive while looking in the rearview mirror, we're going to look ahead and check out the roadmap he's laid out for us. Okay, first up, the economic forecast. We're going to use a really powerful analogy for this whole thing, thinking of the economy as a weather system. I mean, you wouldn't head out for the day without checking the forecast, right? The exact same logic applies to our finances. What this tells us is that we're in a moment of transition. Dalio sees some clouds gathering on the horizon. Our job today is to figure out what's causing them, just how big this storm could be, and most importantly, how to build ourselves a shelter before the rain really starts coming down. So what are these gathering clouds exactly? Well, Dalio is pointing to 3 major risks on the horizon. Let's break them down one by one. The first risk isn't some big, mysterious force of nature. Nope. It's something created by policy decisions. He's specifically pointing to things like new tariffs, which can have a really direct and surprisingly fast impact on the economy that you and I live in every day. And this, right here, shows you the chain reaction perfectly. It all starts with new tariffs. Then, to cover those extra costs, companies often have to raise their prices. When prices go up everywhere, well, that's inflation. And if things get too expensive, people start buying less, which can lead to an economic slowdown or even a recession. You can see how one thing clearly leads to the next. Okay, the second risk is all about the flow of foreign money into U.S. assets. Now, assets are just things that hold value, like stocks, bonds, even real estate. The crucial thing to understand is that the flow of international money coming in to buy them is starting to change. So why does this matter to you? Think about it like the housing market. When tons of people want to buy houses in a neighborhood, prices shoot up. But when fewer people are buying, prices can stall out or even start to drop. It's the exact same principle here. If less foreign money is flowing in to buy U.S. assets, that lower demand could affect the value of everything from your 401k to the price of homes. The third risk is a little different. It's less about the immediate future and more about the next massive economic frontier, artificial intelligence. And believe me, this isn't just about cool new gadgets. It is a high-stakes competition for who will lead the global economy for decades to come. Let's be crystal clear about this. The country that wins the AI race is going to have a staggering advantage. And while the US has a strong lead right now, this race is a marathon, not a sprint. The outcome is going to shape the world our kids and grandkids live in. So it's a huge, huge factor of uncertainty. Okay, so we've laid out the risks. It might sound a little intimidating, but this is the most important part of the conversation. This is where we pivot. Dalia's message isn't to run for the hills and panic, it's to prepare. And this right here, this is probably the single most important mindset shift to make. Economic shifts, downturns, all that volatility, they aren't just threats. For people who are prepared, they represent incredible opportunities. When everyone else is panicking, the savvy investor sees a chance to build real long-term wealth. So how do you become one of those savvy people? You do it by building yourself a financial safe harbor. Think of it as an all-weather strategy that's designed to protect you from pretty much any storm the economy can throw at you. And the single most powerful tool for building that safe harbor is diversification. It sounds like a fancy word, but it's a super simple concept. It's the foundation of smart investing. All it really means is not putting all your eggs in one basket. This slide just lays out the difference perfectly. On the left, you've got a concentrated portfolio. It's fragile. If that one market or that one stock takes a big hit, you are in serious trouble. But on the right, a diversified portfolio is resilient. Sure, some assets might go down, but others might go up or just hold steady, and that balances things out. It's built for stability, not just for growth. All right, let's get practical. Let's look at the actual building blocks of what Dalio calls an all-weather portfolio. What does this actually look like in the real world? So here are the core ingredients. You've got your US stocks, but also foreign stocks, which you can easily buy through things called ETFs. They're just baskets of different international stocks all bundled together. Then you add in government bonds, commodities like gold, and even assets like crypto and real estate. The secret is that each of these is designed to react differently to different economic seasons, and that's what creates the balance. Now, this chart gives us a great visual model, but here's the key insight into Dalio's thinking that most people totally miss. The goal of this all-weather portfolio isn't to get the absolute highest returns possible. The goal is to be so balanced and resilient that you don't lose big money no matter what the economic weather is. Inflation, deflation, growth, recession. So when stocks are going haywire, your bonds and gold might be holding steady. It's all about survival and consistency, not just chasing the highest highs. That's the whole idea. And that, at the end of the day, is the ultimate takeaway. Nobody, not even Ray Dalio, has a crystal ball. This whole strategy isn't about perfectly guessing what's going to happen next week or next year. It's about building a financial foundation so strong that you'll be okay no matter what happens. So, I'll leave you with this question to really think about. When you look at your own finances, have you built a portfolio just for sunny weather? Or have you built an all-weather ship ready to navigate whatever economic season comes next?